Hello everyone. This is the pre-market report video for today, 6th August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First of all, as I mentioned in thumbnail, last night Dow Jones dropped again and that too over 1000 points. So we need to understand what happened in US market. But before that, I like to highlight about the Japanese market. I agree all these sell-off started last Thursday from the poor manufacturing PMI data and again on Friday in US more bad jobs data. So the global momentum was very bad during the weekend. But yesterday's panic sell-off was actually started in Japan since before the Japanese market opening, US future market was down but only around 1%, not like this 2 to 3% down. So let's see what really happened in Japan. On last Wednesday, global market didn't expect this. After 2009, for the first time, Japanese central bank increased their interest rate to 0.25%. So even before yesterday, between last Wednesday and last Friday, Japanese market was down 8%, but global market didn't give enough attention to it. You might ask me, the Japanese interest rate increased only from 0.1 to 0.25%, then why market is panicking? The reason for this is very unique to Japan because the interest rate is very low. More companies and more people, even from US and other countries, borrow money from Japan and invest in elsewhere, including in the Japanese equity market. If they do the same thing in Europe or China, comparatively, there is a high risk that Europe or China currency might appreciate. But for Japan, always they don't want their currency stronger, so their exports goods can be more competitive. Hence, earlier the currency appreciation risk is low. So only more people willing to borrow from Japan, and when they repay, if the currency depreciated, there also investors were getting benefited. Hence, Japan is the go-to place for borrowing. However, that now last week when the Bank of Japan increased their interest rate, low risk turned to be a high risk. Still, market didn't panic on last Wednesday to Friday period, but panicked yesterday. Why? Regarding the reason, yesterday early morning, Bank of Japan released their last June month meeting minutes. And in that, 2 of 9 board members called for the early interest rate increase in June month itself, but they didn't increase at that time. Rather, they increased it in the July month. In addition, all the members agreed the fact that depreciation of Japanese yen value is one of the major reasons for the inflation increase in Japan. So they signaled no more yen depreciation and also possible some more interest rate hike this year. Hence, that's the reason despite the Japanese market index dropped over 12% in one single day, actually Japanese yen appreciated. That's the story. Bad global momentum. Already Japanese interest rate hike increased the yen appreciation panic, and on top of that, yesterday's Bank of Japan meeting minutes showed more near-term interest rate increase. So what next then on this issue? Immediate things we need to look out for is tomorrow Bank of Japan's deputy governor speech or press conference is scheduled. So market is kind of waiting for his comment on this case. Hence, based on his comment, tomorrow anything can happen. We know Fed chairman, at least we can judge him. Honestly, I don't know what to expect from Japan's deputy governor. But there is one thing I like to highlight. Because yesterday's fall was massive in Japan's index in the last odd 30 years. So Japan's opposition governments are requesting the Bank of Japan governor to come to parliament and to give the explanation why he is increasing the interest rate, etc. and all. This is the exact word they said. Because of weaker currency, Japanese companies are making windfall profit, why Bank of Japan is ruining kind of. So if deputy governor is afraid of parliament means, then tomorrow he might speak market friendly. Let's see, only time will tell. Anyway, now coming to US. In addition to this Japanese issue and poor jobs data, based on the Berkshire Hathaway weekend filing or disclosure, apparently Warren Buffett sold nearly half of their holding in Apple. This added fuel to fire yesterday. So only yesterday morning itself, US future market was very bad, which we discussed in the last video. That continued in the US market last night as well. Dow Jones down 1030 points or 2.6%, S&P 500 down 3% and Nasdaq again crashed 3.38%. In case of VIX, it increased 65% and moved to massive 38.5. So, is it again bad today? If there is no more negative from Japanese market means the answer is no. I mean, even yesterday I told this, the predominant sector in US is service sector. So, if the service PMI data comes good means then that might stabilize the market. Fortunately, yesterday's service PMI data came as expansion and it was in line with the expectation. So, whatever US spot market down last night, it was down already yesterday morning itself in the US future market during our market trading time. Hence, last night, this massive US spot market negative close was already factored in our Indian market. And in addition, at present, US future market is trading around 1% positive. Based on this, it's indicating the gap up opening of around 60 to 100 points. Whereas, based on GIFT Nifty early morning today, it closed at 24,124, equating it with the spot market. It's indicating the flat to positive opening. About Indian ADR, Infosys, HDFC Bank and Wipro all down more negative than Indian market, around 3 to 4.5%, whereas ICICI Bank and Indian market was down around 2%, but in US ADR it was down only 1%. Here, though all the stocks significantly negative, it's just an arbitrage correction to the Indian market. So these ADR showing slight negative in IT stocks but flat to positive in banking stocks. As a summary, as I said, if there is no negative surprise from Japan today means more probably Nifty might open positive. Based on US future market, we can say it's indicating 60 to 100 points gap up. But for now, from GIFT Nifty early morning close, it's just flat to negative. I hope at least today market will return to its some sanity. Let's see. About the things to look out. Early morning, Japanese household spending macro was released now and it came as less than what market expected. So that may be the reason why US future market suddenly turned positive. Then after that, during our market time in the afternoon, Europe retail sales data, then UK and Europe construction PMI data are due. Finally, in the night for US 3-year note auction, EIA short-term energy outlook and US trade data are some of the items we need to keep an eye out today. Regarding technical, apologies, because I was analyzing too much on Japan related, I was not able to do the technical analysis and that's okay since at present, every known indicator will have the negative crossover. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.